Craig Cowie, thank you for joining me today at the Qatar Projects event in Doha.
Sure.
I'd like to start by asking you about oil prices and just what sort of impact are you seeing at the moment with the low oil price?
At the moment, Rob, we're not seeing an immediate impact as yet. To the point, and some of the conference speakers spoke today, the budget was set at $67 a barrel. It's below that, but I think it's too early to pick up any tangible or noticeable move away or reduction in spending or investment. Again, too early to tell. But given that the budget was set at a realistic level in terms of 67-ish, there shouldn't be a meaningful impact, but time will tell.
In terms of investment in real estate, which is what you look after, does the low oil price have any impact there in terms of making investors more nervous, make them think again?
We haven't seen any of that yet. In actual fact, in the last couple of months, we've seen an acceleration in the need to diversify. So we as a firm have got our own proprietary capital, which we invest in North America, parts of Asia and Europe, and we're very, very liquid, and we're looking to increase our allocations to those markets. At the same time, we continually hunt for domestic opportunities. So no, we have not seen that impact hasn't impacted us as yet. Our clients, there may be an impact, but again, we haven't seen it as yet. And given the need for domestic investors to diversify their holdings, I can't see it having an impact.
You said that you're looking to invest globally. What about slightly more locally, looking at the Gulf or wider Middle East? Are there opportunities there?
Yeah, we are a GCC-based investment bank, private equity firm. Qatar, definitely. We made two reasonably significant investments in 2014, totaling almost $90 million of equity. We do look at opportunities in the UAE and Saudi, but the barriers to entry in those markets are pretty high. Makes it a lot tougher for us. So where we invest in the Gulf, we prefer to invest in our own backyard, which is Qatar.
And is Qatar a hot market for you at the moment? Are there a lot of opportunities here?
No, everything but. I think there's a lot of domestic players. The opportunity is in doing new developments, notably on the residential, healthcare and accommodation in those sectors. And there are a lot of domestic investors who have got the opportunities. So and given the liquidity given the liquidity in the sector in terms of the banks, there's not a shortfall of equity, which makes a private equity firm like ours less relevant. So we tend to operate in the secondary market. I'd say there's a shortage of investment stock by definition. But we have made two reasonably, as I said last year, we made two reasonably big investments, and we look to emulate that in 2050.
So for 2015, what will success look like? What are you planning for this year?
As a firm, again, I think North America, given that Europe has its challenges, you just have to look at the dollar euro for some guidance. The excess liquidity in Europe there's substantial excess liquidity in Europe. So I think for us as a firm, the focus is Qatar and the US for now, and we'll look to re-look at that later in the year and see if it changes.
And just looking at real estate investments finally, what is an attractive real estate investment? What are you looking for?
We look for a blend of, as QInvest, we've got a book which basically straddles what I would call high yielding credit or mezzanine. We've got preferred equity and we've got equity. Obviously, being Sharia compliant, we have to be sensitive as well. But we look to invest in some, sort of London residential developments. We look to take on some mezzanine positions and then equity positions, which we've done in all markets. So I think we'll continue with that same strategy of looking into each of those 3 or 4 buckets that I've outlined.
Craig, thank you for your time.
Pleasure.